What's up, my fellow Harmonic degenerates? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. And I know, it's been a minute since the last video. Life's got in the way with the new baby, kind of difficult. Also, the market got weird. And let's be honest, sometimes you just need a break from staring at those fib levels and wondering why Point 3 betrayed you. But we're back just in time because this week is loaded. So we have a juicy week ahead of us, guys, and it starts with Powell stepping up to the mic. He does have a speech this week, and you already know, one pause, one smirk, or a single data dependent, and the entire market's either ripping faces or heading straight to the underworld. So if he says inflation remains sticky or drops that data dependent bomb, get ready for a 3% swing and for FinTwit to start spazzing out. Then there's existing home sales. This is just code for who's rich enough to afford 8% mortgages, but this is where we find out if anybody's still buying real estate or not. Durable good orders is also on the docket this week, so this is where we'll see if businesses are still spending or if they're just putting everything on Klarna. And last but not least, we have earnings. Well, earnings is when companies beat expectations. The stock tanks anyways, and we'll pretend to understand why. Expect a bunch of companies to either rocket 15% or tank for absolutely no logical reason, just vibes and AI buzzwords at this point. So if you missed the harmonics, the chaos, and the occasional psychological damage that comes with trading, do me a favor, smash that like, drop a comment, and subscribe so you don't miss out on future videos. Having said that, I also want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those harmonics. Alright guys, jumping over to SPY here. So SPY on the daily does have a bearish harmonic bat pattern that generated all the way back on June 11th. This is where the pattern could have started. A potential reversal to the downside for a type 1 reaction to target 1 at 557.97, but it did hold on to XA, and it looks like it's going for the type 2 return to hot first before any reversal. So it's going to be very important to see what it does here. It got very close to that hop target, which is 631.76 on Friday. It did go to 629.47 and did generate an HSI dot. So the HSI dot is doing a previous check back from, looks like it, from June 7th here, where that HSI arrow triggered, calling for that reversal. But SPY market held on pretty well and continued pushing up higher. So it's going to be very important to see if hop is going to be that level of resistance. As I bring out my oscillators, the oscillators here, you can see that the RSI is approaching that 70 level. The HSI, on the other hand, looks like it's about to cross that midline. And if it crosses the midline, then we have a higher target. I think it goes way past 631.76 for potentially a new continuation into price discovery at all-time highs, where we can track on the weekly, where you do have a harmonic white swan where it completed a type 1 reaction all the way to PT3 and is now doing a type 2 return to OPR. Yet it's already 4 candle closes above CD 613.23, and it looks like it wants to reach that 642.79 level before any rejection. The HSI on the weekly is a bit overbought, but it has not entered the extreme, which has happened before. So SPY could go into that extreme, which I would start looking at that OPR target at 642.79. Could definitely happen, especially with earnings. A lot of companies report this week, so if they beat earnings, especially the big tech companies, you can definitely see the market continue pushing higher. Let me bring on my drawings here. I don't really have too many support lines up here because we are in price discovery. I do have a level here at 693, that 693.35, which is a fib ratio from previous all-time highs to the swing low that we got here. I believe that's like the 1618 if I'm not mistaken. But obviously price discovery, it's really, we were just trying to figure out where the market thinks it's a good level to either start the reversal or consolidate. It's just really hard to figure out where the market wants to go to from in new all-time highs and price discovery. It's like, who's going to show their hands first, right? So right now what we can best thing we can rely on is just fib ratios, in my opinion. So looking at here, let's put some levels to the downside. If you do get rejected at hop at 631.76, I have a support line at previous all-time highs here that we got rejected a few times here back in Feb, and then we broke above it in June when we created new all-time highs. So if we get rejected around 631.76, I do have a level just slightly before that. It's going to be just right around 620.50. I'll just put it here. It's not really going to be a strong level, but there is, you can see some few touch points there that you can find support. So if you get rejected 631, look for 620 and change. and below that you start coming down to that 610. Below 610, and you have 604, 602, and then XA there where you have a gap to fill. So right now on the daily, harmonically on the HSI, looking at this pattern, we're looking to see if this is going to break above that midline. So if that midline crosses, I do think we can start looking at those weekly higher targets. Or if we get rejected here at that midline, I do think that's top, and we want to see get rejected there. So those are the levels I'm looking at here on SPY. I think the market's going to be looking at what Powell's going to say, but more importantly, I think everybody's looking at earnings to see if there's any indication of these tariffs actually going to affect some of these companies or not, or if it's too early to tell. So right now, I'm not really looking for major downside. More in terms of what the market's going to do is more upside if they decide to beat, if these companies do beat earnings. So, and those targets to the upside is anybody's game, right? Nobody knows, right? Because this is price discovery at this point. We can just rely on the harmonics that are up here, and that's what I'm going to rely on as a next target after 631 for more continuation is going to be 642. We could just draw fib ratios here, guys, just tell you where it could be the next level of resistance. You could take the previous all-time highs here to the swing low that we had here when the tariff news came out. You can see 648 here at the 1272.98 on the weekly would be up pretty close above OPR there too. So that would be the next target, 1272, and if the market decides to continue to that 1618, that's where I have 693.45 here, 693.35. So I believe if the market's bullish, I do think there's going to be seasonality at play. You might start seeing some downside towards maybe August, September, but that's too early to tell. That's going to be obviously data dependent, and if seasonality is a thing, we could see that's when the market might come for a correction, and then maybe a rally back up to that target at 693 down the line or closer to the end of the year. So we're not there yet. I'm just going to be looking at towards 631, 642 for SPY here. And like I said, to the downside, you want to see rejection hop at 631 for the bearish case scenario. If you do get rejected at HSI midline, then we can start looking at 620, the level I just drew here, and then back to 610. So that's going to be the level, maybe level of support there. Also 617.80 where the 21 EMA is at. Since we've been climbing above here, we have come down to test it, but we've never fallen below that 21 EMA. So that's going to be something to look at. If it decides to go to that 617, that's also where we did kind of get close to that level there at 618.05 on Wednesday, but we held support with high volume hammer candle. So technically that is a reversal candle, and you did close above higher with the previous candle here of the hammer candle, and you're continuing to close higher, and except for obviously Friday you came down a little bit, maybe to reset some things, but that candle, the hammer candle, was a reversal, and you can continue pushing, but we're gonna have to look at the volume. So too early to tell. The volume did come in on Friday, just slightly below Thursday's volume, so want to see if bears are going to continue. You want to see high volume, but until then we just have to wait and see what's going to happen here with the market. So that's all I have for SPY, guys. So definitely keep a close eye out on the SPY, especially with all these companies reporting earnings. Jumping over to the triple Qs. So the triple Qs, same bat pattern, bearish bat pattern on the daily as SPY, but the difference here is that Qs has actually broken above hop here for 2 days now. Still holding above hop at 560.33. Let me bring down my drawings here. And the HSI did cross the midline, above the midline for the triple Qs here. You do have a bearish divergence here approaching, but still unclear yet, right? If we look at the RSI, that bearish divergence is still there. It's maybe starting to correct itself. We could just draw the trend line so you guys can see what I'm talking about. RSI making higher lows, lower highs. And if we go over here, you can see that the actual price action is actually making higher highs. So there is a clear bearish divergence there. Now, this could obviously get invalidated if the Qs decides to start pushing back up towards that level at 72. Then it invalidates that bearish divergence. On Friday, though, you did generate this hammer candle, better known as a shooting star here, reversal at the top of the trend, where it may be calling a reversal is incoming. So what are those levels to the downside if that is the case here for the triple Qs? You do have an HSI retest line there at 553.50 51, call it. That's where you wick down to on Wednesday. And below that, I do have a line at 549.70, which was, I believe, the previous fib ratio from previous all-time high to the swing low was at 549.70. In my opinion, if you lose that level, that's exactly where the 21 EMA, and just like I showed you guys earlier on SPY, that 21 EMA has held support. So if you lose that level here at 549.70, I do think there is a movement to the downside all the way, maybe to XA, maybe you test the 50 SMA, where there is a gap to fill here at 532.17. Let's just draw that out really quick here. There's this gap here to fill. So if you lose that 21 EMA, maybe you go a little bit higher before you come down, or unless it starts to come back down with volume and you do lose that level, you might be going for that gap fill, which is at the 50 SMA, and then maybe harmonically to that 525.03. And then if you lose that level, guys, then you start your type 1 reaction towards 479.08 for the type 1 reaction. On the weekly, if we go here really quick though, the weekly, you can see that volume is increasing to the upside here. So that's 3 weeks, volume increasing, and you're still above 549.70, which could be a level of support. But we'll see where this is going to continue. On the Qs, I don't have any level to the upside above 549.70, but like I said, there's no harmonic either. We could track this from previous swing high to swing low here. 578 at the 1272 is at 578.46. That could be your next level before you get rejected. So it's going to be very important to see what the Qs is going to do here. It's very tricky right now with tech. Tech is all over the place. You got Apple kind of consolidating, pushing up. It's in a range. You got Microsoft pushing at all-time highs. You got Tesla very swinging back and forth. And you also semiconductors were pushing up higher. And then you had things like Meta, Amazon, Google dumping, and then it's just tech is kind of weird right now. So we're gonna see if there's any conjunction or they both start moving together. Whole tech in general starts moving together for more upside. The HSI, like I said, did cross the midline, and if it decides to go to that overbought conditions, that can be towards that 570 target that I was talking about, 578 I believe it was. So until then, like I said, if you do get rejected here, look to see what happens at 549.70 on the 21 EMA. If you lose that, then you can start looking for more downside. But until then, definitely keep a close eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones, same pattern, bearish pattern, bat pattern, like the triple Qs and the SPY. It is holding above XA here. The HSI kind of just slightly below the midline. It looks like it might be trying to push up. We look at volume. Volume did pick up here this week, and then on the sell side for Friday. So if we bring out my drawings here for the Dow, I do have a level of support down here if it decides to get there. I know there's a lot of lines, bear with me, at 442.72. So that level here, if we go back all the way here when the Dow Jones was actually one of the first ETFs to make all-time highs during November, you can see you got rejected here in November of 2024 at that 442.72, came back down, grabbed liquidity, and broke above. You actually gapped up, and then you started selling off again. Then you broke above it, began back in January, and you had some consolidation here before you ultimately failed with tariff news and all that good stuff there. Pushed the market to the downside, and now back again, you are at that level here at 442.75, where there is a battle again to see if this actually is going to hold. So if you do hold here for the Dow Jones and you break above 440.86 like you did back over here, you can look at previous all-time highs. Above that 448 target, I do have a new target for an all-time high at 454.28, and then you have Hop there at 462.21. I do think if the HSI does cross that midline, that is going to go towards that Hop at the overbought zone, right? If it decides to get there. Obviously, we don't know if it's going to get there or not, but we're going to see if theoretically speaking, if you go to that overbought extreme zone here, above that blue like has done in the past, I do think that is your Hop there at 462.21. To the downside here, though, you're looking to lose XA, right? Or the support line there that I drew at 442.72. If you lose XA 440.78, you can start looking towards 435. There is a gap to fill there around 434 and change, and then below that another gap to 426, just slightly below the 200 SMA. One thing to note here though for the Dow Jones did get a golden cross right here. So The golden cross, if it hasn't played out yet, and if it did play out, because it is a lagging indicator, you could have argued that this already played out for the golden cross. You also do have a bull flag now on the daily here, right? This would be your bull flag. This is your pull. So this is indeed a bull flag, and you do break above that trend line, above that top trend line, then you could start looking for those targets here, 448, 454, and then 462 for that potential breakout, and that could give you the confirmation that the golden cross is actually, in fact, playing out. Over to the weekly, we did leave off of a close off of a long-legged doji, an indecision candle. So don't know what Dow Jones is going to do from here. We'll see if this is going to continue testing these levels here. So you can see back here in early January, you got 1, 2, 3 wicks there, right? And a few rejections there prior to that in December. So we're at these levels again. It's going to be very important to see what the Dow Jones does above this level here at 448. So Dow Jones tracks obviously 30 stocks from different sectors. Some of these sectors are doing pretty well, but we'll see if that is going to play out with earnings coming up for more continuation to the upside. So definitely keep a close eye out on the Dow Jones. All right, jumping over to IWM here. So the Russell 2000 does not have any harmonic on the daily, but we are tracking this upwards channel, creating higher highs and higher lows. There are some good volume to the upside here the past few weeks. You can see volume increasing with very little selling pressure up until Friday, where you did get high volume pressure to the downside. So if we're looking at here at the weekly, we do have a few harmonics here, bearish harmonics, but they look like they're coming up for their type 2 return. You can see that there was a bearish bat pattern at the completion of the pattern. You came back all the way to type 1 reaction below target 2. And on the white swan, you also went below T2, but you never got to PT3 there. And then now you reversed back up for a type 2 return to potentially hop for the bearish bat patterns, calling 256. For the white swan, OPR is at 232. So if we're looking here at IWM, what's the next target here? Let's look at the volume first. You can see that the volume was increasing, and now you're left 2 weeks in a row with an indecision candle, but you did close slightly higher than the previous weekly close off that doji candle, the long-legged doji. Also, if we draw a fib ratio from its previous swing high to swing low, you can clearly see that it broke above the 618. So now it's 3 weeks above the 618. So what does that mean? During this whole swing wave, this first impulse wave here, you can clearly see that the momentum is shifting potentially bullish, right? You've already reclaimed 61.8% of the wave. That's more than half of the wave, which could give you an indication that maybe price action wants to continue pushing higher. You can see the 786 is at 229.19. That's very close to that CD target at 228.63, which is very close to my resistance line at 227.13. We can go all the way back here to 2021, where you can see there was a bit of chop there. You did break above it a few times, but ultimately you failed here towards 2021 up until October 21, where you had that jump, but you never managed to hold above it, and you came back for what looks like from 2022 all the way up to 2024. So almost like 2 years, a little bit over a year and a half, where you were in that range between 201 and 160s. You finally broke above it here back in November, and you came down again in that below that target there at 227.13. So that's the next level I'd be looking at here for IWM. If you break above 227 here, then you're looking for more upside, maybe towards OPR XA at 235. I do have a trend line here, resistance here at around 240, and then you have hop there. The HSI, a bit overbought. It is reaching, maybe it's at the overbought zone. It could reach the extreme like it had done so back in 2023 on December. So if that happens, I think that's going to be XA. You can get move back up there, maybe above that 227. And what can happen here, maybe, it's still early to tell, you might be generating a potential inverse head and shoulder. You got the left shoulder here, and you got the head, and right now, maybe you do wake up here, like you did previously on the left shoulder, come back down. You could come back down to T1 to grab some liquidity, reset the oscillators, and then find support, and then this would be your obvious neckline right here, right? Break above that, that neckline and that inverse head and shoulders playing out. You can start looking towards that hop target at 256. You can just draw a trend line from the bottom of the head to where the trend line is at, and where you find that right shoulder here, where the break of the neckline. That's obviously going way above hop to around 280. So obviously that would take some time to play out. The mid caps do look like they're getting some momentum, as well as maybe different sectors are shifting profits into the mid caps. It's unclear yet, but right now you do have also a 2050 crossover. So maybe we'll see if we get just a bit of wick up there and then we do start coming back down. And then if I do see a potential opportunity there for that neckline break of the inverse head and shoulders, then I would be looking for upside. But right now it's still too early to tell. On the daily, like I said, the HSI is below that midline. Not sure if it's going to curl down or it's going to start going back up here. So those are the levels to watch out for IWM. So definitely keep a close eye on the Russell. Jumping over to XLF here, the financial sector ETF, we do have a bearish deep crab, generated an HSI arrow, and you did come down here for the type 1 reaction, target 1 at 51.86. You slightly came a little bit lower to a previous XA target from a previous bearish harmonic bat pattern there. Right now you are starting to get some momentum back up on XLF. The financial sector is starting to pick up. If we draw a fib ratio here from recent swing high to swing low, we can see where we're at in that impulse wave. We're clearly above the 618 still, on that indecision candle with low volume. So we could be consolidating there. That's the next level you'd be looking at. The HSI dot retest line around 52.75. In my opinion, you can start looking bullish again on the financial sector. If you break above 53.13 XA, you could look towards hop at 54.08. If you do get rejected here at the 618, you could be looking for a retest of that 51.86. Below that, then you have 50.98. We go over to the weekly. The weekly tells a different story. You have a high volume hammer candle at the bottom. I mean, this is a downtrend that it had, right? And you could potentially start to reverse back up. So break above here, 53.16, where you did go and close here back 2 weeks ago, and you also got rejected there. You break above that level here on 53.14, then I can see that 54.13 HSI midline hovering above above the midline here, kind of almost sideways in a kind of consolidating here. Doesn't clearly tell you if it's gonna start to curl up or curl down. We'll see how it opens next week, but support above the 9 EMA there. It looks like a strong hammer candle potential with increase in volume. So XLF could be picking up here for the type 2 return to 54.08. So definitely keep a close eye out on the financial sector. Jumping over to XLE here. So XLE on the daily, no current harmonic pattern. A little bit of rejection here at the 200 SMA. Unclear yet. There's some definitely volume that came up here during June, mid-June. Right now you're kind of double topped here and rejected. You're trying to break above that 200 SMA, but volume did come in on the sell side. Significant volume did come in on Friday. The HSI is approaching maybe those oversold conditions, and that can be maybe a retest of the HSI dot retest line where there is my support line there at 82.51. If you go over to the weekly, again, no current harmonic. You could just see this HSI dot retest line as a level of resistance. You have broken above it, but ultimately you never hold it and continue pushing higher. So that's the level I'd watch out for. What happened here back in March? You had a huge rejection with volume that came in at that HSI dot retest line. So unclear what XLE here, the energy sector, wants to do. There's a lot of geopolitical issues going on. But if you do come down to 82.51, I'd be looking to see if it comes down to that HSI dot retest line off of 75.58, like it has done in the past. When you break below that 82.51, you could come back all the way down here like you did over here, again over here. So if you manage to hold support above 82.51, you might be looking for upside support at the 200 SMA or the 200 EMA, coming back up to that 92.29 level again. So little volatile here, just swinging back and forth for XLE. So definitely keep a close eye out on XLE. Jumping over to Apple here. So Apple, bullish D-crab on the daily. As you can tell, it's been getting a little bit of resistance up here towards that 214.13 range. Now the 200 EMA, little swingy, right? So you come back up here. This was your first, like, I guess, top, second, third, and then fourth here. And every time you come up to test this 213, 214 range, you slightly come back down. Right now you're consolidating just slightly above the 9 EMA. Maybe this could potentially be a cup and handle here for that breakout above the 200. Volume did come in on Monday through Thursday, but pressure still maintained itself upwards above the 9 EMA. And on Friday you had some decent volume come in. So a very tricky spot, Apple here. I'm not sure if it's waiting for its earnings to break above or finally break below some levels here. I'd be looking to maybe see if you can go long a break above this area here, above 214. If we bring out my drawings here, there is a gap to fill. It did try to get inside that gap, but ultimately still finding resistance there. So I'd be looking to see if it breaks around that 214 range, start filling that gap towards 220, and test that 200 SMA at 222, and then target 2 is at 225.38. I don't know if it's going to do it before earnings, or that's going to be the potential earnings scenario. Maybe you consolidate up in this range, and for the short side, I'd be looking to see if you get rejected here. Back to the HSI dot retest line around 201. I have a support line at 198. If you do lose 198, then you could look for bearish downside here towards at least 188, and maybe down the line to exit at 185 there. So on the weekly, if you go over here really quick, you can see that the 50 EMA has been resistance here. Pretty much same volume past 2 weeks. HSI is approaching the overbought condition, still not there yet. That could be towards the entrance of the gap. But like I said, very unclear yet for Apple. My opinion is too risky here. We'll just wait it out until it finally breaks above this level here. Just draw a horizontal line here really quick. Just break above that, you can start looking for upside. If you get rejected, you might be coming back in the range between 213 and 198. Below 198, then you can get slightly bearish back out to 188. So that's all I pretty much have for Apple. My opinion, a little too swingy here. Let the market do what it's going to do with Apple, and then you can see maybe play the upside of the breakout of that 213 or the breakdown of 198. So definitely keep a close eye out on Apple. Jumping over to Microsoft here. So Microsoft, what a beast. There is a bearish crap pattern on the daily where it's clearly looking like it's going to invalidate it here. You had a lot of good buying pressure here. Shows support above hop at 497.56. You did get a little bit of bearish volume to the downside on Friday. Completely overbought on the RSI. There is a bearish divergence, right? This is a lower high on the RSI, and you're creating higher highs on the price action. So what can we expect here for Microsoft? If it decides to continue pushing up here, like I said, you're in price discovery, so this is the hardest part to figure out where it's going to go. We rely on fib ratios to potentially tell us where rejection could be at a level of resistance in a fib level. So if we go to the weekly here, I do have a level at 544.71. I think that's the 1618 from its previous all-time high here to the retracement we got. If we just draw it really quick, it should be that level. Yep, that is the 1618 there. That would be the next level I would have for Microsoft if it decides to continue pushing. So much volume pressure came in here on the weekly. So it did get the cross above the HSI retest line here. It looks like 9 candles. I think we're more than 9 candles on the TD sequential. This is the harmonic sequence indicator that tracks TD sequentials within the harmonics. So this is the 9th candle was telling you the reversal was coming, but Microsoft came in here and we were like, nope, we're not going to reverse anytime soon. And you actually continued with this candle with higher volume. So not even a candle print number 1 to the downside to indicate any potential reversal just yet. RSI, HSI, and the amplified RSI are at overbought conditions. So the 1272 is at 501.96. So if it's going to give us a reversal here, we definitely want to see a candle close telling us the indication that the reversal is incoming. Right now I don't see it, but maybe we can get it here soon, maybe towards earnings, who knows. But if we get an indication here, you might look towards that 1272 at 501.96, maybe print an HSI arrow, and then you'd be looking back down, in my opinion, over here to 468, previous all-time highs, and then our support line at 457.26. But right now, I would not be touching Microsoft on the downside or shorting this because you're going up against a strong trend here. And since we're in price discovery, we don't know what market participants want, how high they want to take this to. And yeah, so wait for confirmation. You could say that maybe Friday was confirmation, but man, I would still give it a day or two before anything. If anything, I'm looking at the harmonic here on the daily. Maybe hop would be your level where you actually go and start looking a little bit bearish. You lose that 21 EMA, maybe you go down to XA, but it's still unclear. So definitely keep a close eye out on Microsoft. Jumping over to Amazon here. So Amazon on the daily, no current harmonic pattern. We do have this harmonic pattern previously here, but it's past the 30 bar rule. We're looking at the HSI. The HSI is starting to curl back up towards that midline. So it is in an upwards channel. There's some definitely good consolidation and buying pressure came in here with very little selling. You got selling on Wednesday, and on Friday you continue pushing higher off an increase in volume. So we could look at T2 for a test there at 237.38. You're in an upwards channel, right, creating higher highs and higher lows. If we go over to the weekly, we're going to draw again, rely on fib ratios here. There's no harmonic pattern. There's this previous one here, but I believe that is already invalidated since it went way above hop at the 3618 of the shark, or the 1618, 2618 above the shark pattern there. So if we draw the fib ratio from previous swing high to swing low, we've claimed 61.8% of the wave, which is obviously seeing potential bullish momentum has come back in play, and you're slightly closing above the 786. So the 886 would be 233, and then 242 for previous all-time highs. We can look here above all-time highs. If it decides to break there, then the 1.272 would be at 264.54. Amazon is one of those blue chips that has yet to reach its previous all-time highs, where most of them have. So Amazon is a little lagging. We're going to see if this is actually going to break out here. You could have argued the case here that this was in an inverse head and shoulders. Your left, this would be your head, and you're breaking out here, right? Not in a clear shot up like you normally would get in an inverse head and shoulders, but you're in an upwards channel. So 237.38 there would be the level to watch. To the downside, looks like the 13 EMA is holding support here, that golden cross that you did get back in early of July. If it's lagging, maybe you could have argued that this already happened on this push up, but if it's not lagging and it's actually going to play out, then you got way more upside, maybe towards T2 or even previous all-time highs. Volume is picking up, right? There's very little selling pressure here, but you just also get, you're having a bit of rejection up here towards T1, where you got rejected here on that sell-off. But those are the levels I'd watch out for. To the downside, if you can break below 13 EMA, go to the 21 at 220 and then 214. Below 214, you can get a little bearish towards 201. But if you break above here, then I could see a clear shot up to T2 there, and then previous all-time highs at 242.52. OPR is at 249.80 from previous white swan. So that's all I have for Amazon. So definitely keep a close eye out on Amazon. It does have earnings also in 2 weeks, so the Thursday. So you could be consolidating up for up until earnings, until that breakout or the rejection. So keep a close eye on Amazon. Jumping over to Tesla here. So Tesla on the daily, little bit of resistance here. I've been getting a lot of questions on Tesla and where I think it's going. We have a clear HSI retest line here at 362 and at 259-ish and change. I mentioned in an impulse wave here where you could have looked to get bullish, or sort of this recent impulse wave from swing high to swing low here, that a break above the 50% retracement, you were going to push above 330, and it did happen. It did get up towards that 786 there at 347, or excuse me, at 886, 356, 84 was rejection, and you broke below it. Like, you came back down to test a 236 here, so you're back again towards that 50% retracement. In my opinion, if you can get above 331, then you could start looking for 347. But in order for you to continue pushing higher, you need to get above that 356.84. Right now, to me, also with everything that's going on with Elon and Trump, it's kind of now there's news over the weekend that they're investigating SpaceX. So I don't know how that's going to tie into Tesla. Maybe it could be bearish. It's just too swingy here. I'd be not playing this range here unless you have confirmation with volume picking up. But you can see there's a lot of selling pressure, and when there is some buying pressure, you get a little bit of rejection off low volume. So buying pressure is higher than the selling pressure. So in my opinion, I think a break above the HSI or retest line, you could start looking towards maybe 400s down the line. If you go down below and fail the 200 EMA, I think you'd be looking at 258, 260 and change. If we go over here to the weekly, T1 is holding support at 1969. A lot of resistance here, a lot of battling back and forth here. So in my opinion, too much chop here for me to be playing Tesla here for a swing until at least we break above 3867. You could look for that upside. Like I said, if we go over to the weekly and draw this fib ratio from swing low, look where you're getting rejected. The 50% retracement, you're getting met with some decent volume to the downside. Volume from this point here where the HSI arrow was generated, it is decreasing volume. So you could, again, consolidate maybe until earnings, right? Earnings is on the 23rd, so that's Wednesday. Maybe you do break out of if it's bullish earnings. If it's bearish earnings, and you could be looking towards that 260. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google on the daily has this bearish Gartley pattern where it's looking like it's clearly breaking above that hop level and validating the pattern for the type 1 reaction. So what can we expect here for Google? So I mentioned Google that if you break above 180, you can start looking for upside. Right now, it's very good upside towards that 185. So if you got into break above 180, then you're sitting pretty here, especially if you played options. So the next level I'd be looking here towards Google would be the 190s. I have a level there at 193.70, very close with that HSI dot retest line, just slightly above it. You do have a gap to fill there at the entrance around 192 and change, all the way up to 203 and change, where I have another resistance line there. So right now, looks very good here. Google breaking above that 180, might be looking for some major upside to even come back to test previous all-time highs. On the weekly, we did close above ABCD there at 184.44 off of this bearish ABCD pattern. If we draw a fib ratio again, fib retracement line from swing high, then post wave swing low here, you clearly see that we broke above the 618 for the first time on the weekly. So if you're looking for the next level, 786 would be 192.86, which is at the entrance of that gap, or at that gap. Above that, then you're looking for the 886 at 199.49, and then obviously retest all-time high 1272 would be 225, and then 161 if it gets really bullish to 248. So very good spot Google here. As long as it holds above that 618 from the swing high to swing low, you're okay for more upside and maybe to start creating higher highs and higher lows down the line. HSI signaling maybe wants to go to that overbought condition, and that, in my opinion, is going to be towards hop, or maybe even higher above hop than test the previous all-time highs there before you get any rejection here. So on the daily, again, levels to the downside. If this is a high volume doji candle, the next level you'd be looking at a retest would be 181. Below 180, maybe you could look towards hop at 176 to test below the 21 EMA, and after that, then you can look at the 200 SMA at 173. You're definitely going to have huge amounts of supports here, where all the EMAs and SMAs are gathered together here. So between 170 and 173 should be a good level of support, but unclear yet. You want to see if that doji candle on Monday is going to signal reversal and start coming down. Google obviously has earnings on Wednesday as well, so definitely keep a close eye on Google. Jumping over to Meta here. So Meta on the daily, no current harmonic pattern. You completed the type 1 reaction here, and you also went down to hop. So what can we expect here for Meta? Meta started to get some volume to the downside finally after making new all-time highs. Didn't really go too crazy. Didn't close above a new all-time high. Or did it? Yeah, it didn't really close above a new all-time high. But if we look over here to the weekly, you can see a clear potential double top here with an HSI dot generating, basically doing a previous check back of this previous HSI arrow back in Feb. So what can we expect here for Meta? Meta also has earnings on the 30th, just like Tesla and Google, I believe. So if you do have some rejection here, look towards 648.48. I'm not sure if that's the move for earnings, or if you're gonna come down here towards earnings and then see if you're gonna report good earnings. You come back, there's a gap to fill there around 611, or you can go all the way to CD there. Bring out my drawings here. I do have my support lines here. 635 would be the next level to the downside if it continues before Wednesday and its earnings. I do have 732.89 as a previous level of resistance, and you got rejected twice. So unclear yet what Meta wants to do here. Maybe it does come back to give us another retest of T2 or the HSI dot retest line here at 660. HSI is completely oversold, and you're starting to cross back up. So you could theoretically here on Monday, if you get good volume, start generating an HSI arrow back to the upside. You had a hammer candle, reversal candle trigger on Friday. So if this is going to be the reversal off of the recent downtrend here, you want to see confirmation on Monday with high volume to support the reversals incoming. Because obviously right now, since this did find bottom here, you still haven't tested either the 236 here after the candle was formed or the 382. So like I always tell you guys, if this is a strong downtrend, then if there is rejection between the 236 and 382, expect to create another lower low, a lower leg down for a second impulse wave. And if it decides to break above the 382 or it gets to the zone between the 50% retracement of the 618, that's when it gets a little tricky whether Meta is going to finally shift momentum back up if it breaks above the 618 or that zone to start creating higher highs and higher lows. So very important to see what Meta is going to do. Hammer candle reversal on Friday. We want to see follow through to the upside. If not, you could be coming down for a 921 crossover to the downside. If you get rejected there might be a scenario where you have a left shoulder created already. This would be the head. You could kind of theoretically come back rejection there. This would be your neckline here down the line, maybe towards earnings, because earnings is in 2 weeks for Meta, and then that could be a potential play there if there's an inverted head and shoulder. Maybe earnings is bad and it continues to a downside, or that could be a giant trap and then they report good earnings and then continue pushing for all-time highs again. So definitely keep a close eye out on Meta. All right, jumping over to Netflix here. So Netflix, guys, I did mention earlier in the week that it looks like it wanted to come down to test $1,214.92. Earnings obviously came down here with high volume. They did double beat, and I believe they said even had good guidance to report. Just for some reason, market came down here. Especially, I mean, you could argue that this continued pushing really, really high after price discovery and new all-time highs, and you're taking a bit of profits here. So I know it's a little wonky, not the best head and shoulders, but you could argue the case for it here: left head, and then this would be the right. There was a gap down because of earnings there, but the neckline is here below 1,214. I have the next level, the HSI retest line here towards 1,148, and then you have a range here all the way down to 1,033. HSI is below the midline, curling down, unclear yet, no harmonic pattern. The 921 crossovers are going to be followed through, not clear yet. So if we go over here to the weekly, we're below that 1,214, and we do have a previous black swan pattern where you did push above PT3. So the next level here, I wouldn't be expecting this to play out for a type to return because this invalidated the pattern, but we can rely on the pattern here for the previous targets at PT3 at 1,130, which is very close to my support line here as well. So not much I can say about Netflix here. We'll see if there's more downside or if you find support. If you find support here, then you're looking towards, I believe, let me just double check. Yeah, you'll be looking up to test back up to that 21 EMA there at 1,257, maybe even 1,275 there. We draw a fib retracement. The 382 is at 1,255, like I mentioned. To get back to get Netflix back to bullish, being bullish again for the bullish momentum, take that fib retracement, swing high to swing low. See if you can break above that zone, the 1,272 to 1,288. Break above that, then you can start looking for previous all-time highs again. But unclear yet right now. We'll see if there's follow-through on Netflix. So definitely keep a close eye out on Netflix. Jumping over to NVDA here, guys. So NVDA on the daily currently has this bearish band pattern. Validating the pattern, it's way above hop. So what can we expect here for NVIDIA? As I bring up my drawings here, I had a previous level here at resistance at 171.22 where you did break above it and so far holding support above it. So what can we expect here? There's no current harmonic pattern on the daily. So I'm going to look at targets to the downside here on the daily really quick. So if you're looking to short NVIDIA, kind of wait for confirmation here because NVIDIA, the semiconductor, is kind of strong. And then on Friday, this after the news that they were allowing NVIDIA to sell to China the H100s, I believe, or some of the chips. I forget which ones they were, but that was bullish for NVIDIA. If we go over here and look at the rejection off of 171.22, you're looking to maybe go and fill that gap around 167. And there is an HSI retest line around 165. Below that, you have another gap to fill at 160 and then hop at 157. You could be in a range if you fell 171 all the way down to 154. That's where it helps pretty much good support there. But I still don't know if it's gonna come down here just yet. There's a few things we got to look at here on the weekly specifically. So let me just clear my drawings here. On the weekly, you can clearly see that there was quite the momentum here gathering up for NVIDIA. You're clearly above from the current swing high to swing low, from the previous all-time high to swing low. You retraced 100% of that, and you're looking for potentially more upside. So we can draw a fib retracement here, which was the previous all-time high is 152.89, 152, 153.13. So we'll take here where point D was generated to the recent swing low. You're at 1272 at 170.99, which we're clearly above. So the 1618 here for NVIDIA, we'll draw it out here really quick. 193.71 would be the 1618 of the previous all-time highs to the retracement we had. So 193.71 would be the next level. Maybe it breaks above down the line on towards, if there is seasonality at play to our Christmas rally, the Santa rally towards that 200, but unclear yet for me for NVIDIA if it is going to come down yet. The RSI a lot, and there was a bearish divergence like right here, somewhere around here, where you can see that the price action was creating higher highs, and over here was creating higher low or lower highs. But right now that invalidated that bearish divergence, but you clearly broke above that previous level here from the RSI. RSI still needs to cool off a bit. The HSI is starting to come down a little bit, but we'll see if that's just towards that gap fill. The 90 EMA has been holding pretty much well above support. It did come down to test a 13 EMA here in late June, but right now you're still above the 90 EMA. So if you're looking to short this, I'd be very careful. I'd look to see maybe if it loses 171.22 off of some increase in volume, and then you could just look at towards the 90 EMA. Below that, then I think you might be risking a little bit, in my opinion, because NVIDIA is strong. When this thing breaks above levels here, this thing could really go. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here, guys. So Bitcoin, I had a level at 113.866. Break above that. I do think it's going to go towards 130, I believe was my target. I forget where I got that from. I think it was a fib retracement. From previous swing high to swing low. Yeah, 1618 is at 131k here. So try that really quick, put it on my chart. So people are going to get different things here depending on what exchange you track Bitcoin at. So I track it on Binance. I know people track it on Coinbase, but I'm going to just look at here on Binance, and we'll go over Coinbase exchange. So you're looking at here as a next level at the break above from the swing high to swing low. The 1618 is 131. That has been my level for Bitcoin for its next leg up to reach new all-time highs from the previous all-time highs here. So that's the level I'll be watching out for. The HSI did print a dot on the weekly potential hammer or shooting star, right? And it is high volume compared to the previous candles. So you could be coming down below 113, back up to 101, and then maybe hold support and then go back again higher. But right now, in my opinion, the altcoins are definitely picking up here. So it could be altcoin season. Maybe you do consolidate above 113 for the next leg up on Bitcoin. On the daily, we're looking at here, what's interesting here, that the HSI is about to reach the oversold conditions, which could be that 21 EMA, 113.866, and then you could potentially flip momentum back up to being bullish if you generate an HSI arrow back up to the upside. So I guess I will track here really quick, Bitcoin, Coinbase. There is a previous harmonic pattern here at the shark where you can see that break above hop you created new all-time highs. So you could be testing that 21 EMA, which is around 114.5, very close to what I had drawn here. So below that, and you have terminal at 110, which is a support line I had on the Binance chart. So those are the levels I'd be watching out for. Again, if you break above the previous all-time high, which was at 123,000 on Coinbase here, the next low I'm looking at for Bitcoin would be 130k in general. So definitely keep a close eye out on Bitcoin. Well, that's all I have for you guys. I will be streaming same time as always from Monday to Friday from market open to market close. So if you want to catch me live streaming, I do stream over live on Twitch. So Link to my Twitch in the description below. Having said that, guys, I hope you guys have a good rest of your Sunday, and I will see you guys bright and early tomorrow. Take care, everybody, and peace.